considerations for determining capital and revenue expenditure. Certain guidelines which would help us to identify whether a particular expenditure is capital in nature or revenue in nature. I repeat, what do we mean by capital in nature or revenue in nature? Capital in nature, if it is capital, if an expenditure is capital in nature, we treat it as an asset. If it is revenue in nature, it is treated as an expense and taken to profit and loss account. So a revenue expenditure will reduce our profits. A capital expenditure will increase our assets. Nature of the business. This was one guideline. What is the nature? What do we mean by nature of the business? Now suppose furniture, a dealer in furniture. Suppose a dealer in furniture, what is his business? He buys furniture and he sells furniture. So when he buys furniture, in order to sell the furniture, such purchase of furniture would be called revenue expenditure. Another person, let us say, he buys furniture. He is a trader in textiles. This trader in textiles buys furniture for his office. He intends to use this furniture over the next five years. The same item, that is furniture, in the books of the furniture trader, the furniture which he has bought to sell would be treated as a revenue expenditure. We would call it purchases. But in the books of the textile trader, this furniture that he has purchased for using in the business for the next 5 years would be treated as an asset. So I cannot just simply say if I buy furniture, it is an asset. It would depend on the nature of a business. If I buy the furniture in order to sell, it becomes an expense. If I buy the furniture in order to use it for several years, for a few years, for more than a year, it would become an asset. So the same item could be a revenue expenditure or a capital expenditure depending on the nature of a business. The nature of expense, what does this mean? Usually, if the expenses are recurring, what do I mean by recurring? It happens every year. Like for example, rent has to be paid every month. Maybe insurance is paid every year. Telephone charges are paid every month. Electricity charges are paid every month. So if they are recurring, then they are treated as an expense. But if they are non-recurring, they happen once in a while, they are usually treated as a capital expenditure. Next is a benefit of expense. If the benefit of the expense I receive only in the current year, then it is a revenue expenditure. But if I get benefit in future periods, then that is supposed to be a capital expenditure. So I buy stationery. I buy machinery. When I buy stationery, I intend to use it in the current year. The benefit of that stationery that I have purchased, I get only in that period, in that year, in that month. I don't expect to use the same stationery for several years. So this money that I spend on stationery is called an expense. But when I buy the machinery, I intend to use this machinery for the next 6 years. So the benefit of this money, the benefit of the expenditure on machinery, I intend to get over the next 6 years. So that is a capital expenditure. Machinery becomes an asset. Stationery, the money I spend on stationery becomes an expense. That is revenue. So revenue, expense, capital, asset. Effect on the revenue generating capacity of the business. Suppose we repair a machinery such that the repair work is of such nature, there is so much of overhauling of this old machinery that its productivity has improved. Its productivity has improved. Therefore, can I say that the revenue generating capacity of the business has improved? Such kind of repair by which I have improved the revenue, the capacity of the machine to make more money, to generate more output, made it more efficient, this kind of repair would be capital, would be treated as an asset, would be added to the cost of the machinery. It becomes a capital expenditure. But every year, in order to run my machine, some repair expenses would be incurred. These repair expenses would be treated as revenue because those are costs which are incurred to maintain the machine in the running condition. It is not an expenditure in order to improve its efficiency. So effect on the revenue generating thing, if it increases the efficiency, increases the productivity, the revenue generating capacity of the business, of the asset, increases the efficiency, then it is called a capital expenditure. Otherwise, only a maintenance cost. If the cost is incurred to maintain the asset in the running condition, then it is revenue. Next, materiality of an item. Now, having said this, very often the materiality, the amount involved actually counts. Very heavy expenditure is normally treated as a capital expenditure, and expenditures which are of very small amounts, not very material, may be treated as revenue. For example, if we buy a calculator may cost us only 300 rupees. The benefit of this calculator we would have over the next 5 years. We could easily use this calculator, let us say, for the next 5 years. But the amount spent on a calculator is very small. It is only 300 rupees. In such a case, though the benefit of the expense on the calculator would be got over more than a year, the amount involved is not material, not significant. It is not very big. So such an amount may not be capitalized. We would just write it off as an expense. Expenses, as we had already said in the materiality concept when we discussed, that when expenses are of, say, up to 5,000 rupees, the money spent, even if it is on what would be otherwise we would define as an asset, that is the benefit of which we would get in future years, such an expenditure, because the amount less than 5,000, we could just write off as an expense. So once more, what are certain considerations, what are certain guidelines which help us to determine whether it is capital or revenue? One, it would depend on the nature of a business. The example we took was furniture. What did we say? Furniture for a furniture trader and furniture in the office of a textile trader. So it would depend on the nature of the business. A furniture dealer who buys furniture in order to sell the furniture, such furniture would be treated as revenue expenditure. A furniture bought by a textile trader which he intends to use over the next 3 years would be considered as a capital expenditure. He would take it as an asset and show it in the balance sheet. Nature of the expense, is it recurring, is it non-recurring? If it is recurs, if it is periodically spent, the expense recurs again and again, it would be treated as an expense. But an expenditure which occurs once in a while is usually capital in nature. Benefit of an expense, when the benefit of an expense is expected to be got only in the current period, it is defined as an expense. But when we expect the benefit over more than a year, then it is said to be a capital expenditure, that is defined as an asset. Having said that, we also said materiality and said that if the amount spent is very small, even if the benefit is not received over, even if the benefit is received over more than a year in future periods, since the item amount of expense is not material, not significant, the amount of expense is small, it can be treated as an expense. And also the effect on the revenue generating capacity of the business. When we spend money in order to maintain the asset in a running condition, it is revenue. It is for maintenance, retain its revenue generating capacity. But if we have spent money to improve its efficiency, improve its productivity, improve its revenue generating capacity, then it becomes an asset, a capital expenditure. So once more, what is a capital expenditure? A capital expenditure, the benefit is derived over more than 1 year. You buy furniture, machinery, heavy repairs, overhauling of machinery such that its efficiency has improved. Cinema hall seating capacity increased. If you have increased the number, the repairs have been done in such a manner that more seats have been added, the revenue generating capacity of the cinema hall has improved and therefore it becomes an asset. Benefit is derived over more than 1 year, increases the revenue generating capacity, increases revenue earning capacity, and usually such items are of huge amounts, material amounts, significant amounts. If they are very small amounts, like we said before, it would be treated as an expense, even if the benefit is derived over more than a year or it improves the revenue earning capacity. And a revenue expenditure, the benefit is derived only in the current year, purchasing of stationery, spending money on rent, etc. These are usually recurring in nature, like I said, electricity, telephone, etc. These are maintenance charges. They are in order to maintain the asset in the condition that it is in now. That is a revenue expenditure. The legal charges, even legal charges which are spent in order to maintain the title to an asset, is treated as a revenue expenditure and not a capital expenditure because it is only in order to ensure that the title remains with us. Also, certain non-material items, if the amount involved is small, not significant, not material, then we treat it as an expense. Expense, revenue expenditure. Revenue expenditure treated as an expense taken to profit and loss account. Benefit derived only in the current year, recurring in nature, spent in order to maintain the asset, and items which are not of very material amounts, not of significant amounts.